What up, everybody? Welcome to another class full of gems here at SMC. Today, I want to go through an activity, really like a back test as a unit. So I would like participation as much as you can. Be that this is recorded and I'm gonna be uploading it to YouTube eventually. I don't want too much pausing. I'm gonna try to check out the comments as much as I could, but I really would like quick participation if possible while we do this back test, and then I'm gonna reveal the chart debate answer, and then I'm gonna tell you my future predictions on the market, not just for the futures market, but for the options market, the crypto market, the forex market, everything. Everything's gonna get talked about. So it's gonna be a fire class. We're gonna try to make it nice and efficient. So with that being said, let's get right into it. So you come to a chart. This chart right here is CL. This is oil, and this is what you see. And I think we all could look at it and say, "Dang, it's not really. Doesn't look like there is too much of an edge right now, right? It's like a lot of consolidation going on. Probably, it's really lacking energy in both directions, to the upside and the downside. We're literally going sideways right here on the hourly. So the situation like this, what I try to do is I try to basically point out where the highs and the lows are, so your quote unquote breakout levels. I also like to look for like nearby fair value gaps. So one thing I'll point out here, and maybe you all can see it, is there's some lows right here that I put a yellow line on right there. There are lows right here as well, but to me, if it comes here, it's very likely to tag into this inefficiency. So instead of inefficiency meaning fair value gap, so instead of pointing out those lows, personally, I'm gonna go ahead and draw out this fair value gap right there. All right, so we got a fair value gap on the screen. We got the nearest lows. We might as well go ahead and put the nearest highs. We got some highs right here as well, and we also have some highs all the way up top. And shoot, why don't we reach for the stars and go ahead and mark out both of these highs, just because right here you have a high, a lower high, another lower high, and then more lower highs. And so if we are going to start a run to the upside with some bullish energy, with some bullish order flow, and by order flow, I do not mean level 2 data. By order flow, I do not mean anything that has to do with looking at where the orders are in the market, quote unquote. That's not what I mean when I say order flow. I'm talking about pure price action on my screen. There's a way to tell the order flow. So if we're looking at bullish order flow, it's very likely that all these lower highs become targets once again when we're in bullish order flow. So I want to mark out all of those so I know where they are on my chart, without having to go back to the hourly to find that. So we know what these yellow lines are at this point. We know these are the nearest lows. We got a fair value gap, and hey, why not? Might as well throw out these equal lows down here, and then put these lows here just for the culture. Why not? All right, so we got everything we need, and we can play breakout levels and really ride the trend that we need to ride. Now, let's see what I have in the chat so far. David says he's been going through price action recap withdrawals. He needs this. Hey, we start back tomorrow. The mentorship is live tomorrow. We about to be activated. Keisha said, I've been intentionally avoiding charts and trading until today since the mentorship starts tomorrow. I'm so excited. That's amazing. Shout out to you for the discipline, and I'm glad to get back active tomorrow. Like I said, the mentorship is active, so we about to get you real good. Definitely. So Alex said, would the last low you marked be a fair value gap? The last low I marked is right here. Now this is not a fair value gap. This is just simply a low in the market. You can say a swing low if you want as well. But the fair value gap to the left, I don't know if you meant that. There is a huge fair value gap to the left right here. I'm not marking that off because at this point, to me, it's irrelevant. So I'm not gonna mark off this fair value gap on the left. But if that's what you mean, there is one right there. SSK, your question about the mentorship, DM me. If you have me, just DM me and I'll give you all information you need on the mentorship after class. Yeah. So I got you. Yeah. I appreciate you. All right, so let's get right with this activity. So we have those, and I'm gonna trade this on the 5-minute. I'm gonna trade this on the 5-minute. Now, in real life, I don't stay on the 5-minute and take entries. I typically like to enter my trades on the 15-second, 30-second, sometimes the 1 minute. That's for my entries, but all my trades are always based on a higher time frame analysis. So I do want to make it clear that if you guys see me trading the 15-second, that doesn't mean that my entire trade is based off of that. No, my entry is based on that. But my trade is always based on higher time frames. I'm talking about from the monthly on down. The monthly gives me the dominant direction, and then at that point, I know whether things are retracements or reversals. Don't miss what I just said. I know whether I'm looking at a retracement or a reversal. All right. If I know where the monthly wants to go and I'm witnessing the daily go in the opposite direction, am I panicking? Or do I look at that as basically, do I look at that as a reversal or do I look at that as a retracement? Well, since the monthly snitched, right? Because the monthly is a dominant direction, there's the higher time frame. The monthly already ratted. The monthly told me where we want to go. So when I look at the daily moving backwards, I'm like, oh, this is a retracement, not a reversal. And so that's what I mean. All my trades are like they have a foundation of where is the higher time frame going. After that, it's easier to trade the lower time frames. People tend to tell you to stay up the lower time frames because they don't really understand the overall story of price. So they're on the lower time frames at the wrong areas, taking the wrong type of trades. But if you understand price as a whole, you can really trade any time frame you want. I get the highest precision entries based on like I said, I understand the entire story of price. All right, but for the sake of this exercise, because there's going to be so many candles and we only have so much time, let's stick with the 5 minute for this exercise. All right. So if you want the 5 here, okay, price is moving up. I would say it's for the most part staggering up, but it's moving. It's moving. Don't really see like an edge for an entry right now, so you just kind of letting it fly. And so we know our breakout levels. We know that we have some lows right here. What do I like about these lows? Anybody in the chat can tell me what you like about these lows. Anybody in the chat, what's significant about these lows that you could think of from anything y'all know? Like what is significant about that? So David said relatively equal lows. Yep. Liquidity. SSK says double bottom, which is similar to saying relatively equal lows. So that's valid. So when order flow is when they're engineering liquidity, you may see a double bottom. But if order flow were to flip bearish, meaning we start making aggressive moves to the downside, basically, then what used to be a double bottom becomes a target now. And that's what we call sell side liquidity. So you look at this as a double bottom, people who trade chart patterns, but like what people who trade my strategy tend to do is we wait for order flow to flip over and then we target that double bottom. All right. So that's what I like about these lows is that these are relatively equal. I especially like it. Because the lows on the right are higher than the lows on the left. All right. So that I especially like it for that reason. All right, now let's keep it pushing. You also have these highs up here, of course, like I said, but we open up whatever right now because we're in consolidation. So let's see. All right, looks like we're making a move up, and then boom, a flash to the downside out of nowhere. But I wouldn't say there's like necessarily a reason to enter right now. We can kind of watch the chart a little bit more. All right. So yeah, really going sideways for real. Now it's starting to break down. All right, so whenever we're going sideways, what's something we like to see happen on the breakout? If we're going to break in either direction, what's something we like to see? If we're going to break out, Anjane said it, Donna said it, Lamont said it, Molly said it, T.O. Good. Well, T.O. and Alex both said volume, right? The rest of the people I said fair value gap. Guess what? You're both saying the same thing. A lot of people use volume indicators. The best way to see volume or energy in the market is fair value gaps, not no indicator. So the best way to see it is fair value gaps. That's true movement. That's true displacement. And so, yeah, we want to see fair value gaps come out of that area. So let's see if we get a fair value gap from that area. All right, we got one right here. So if you're going to see that fair value gap, what you want to do is you want to see it get respected. Like now that we created the fair value gap, let's see if it can get respected. And that might be something you want to take an entry on, or you can just get in now and use the fair value gap as a stop loss. So let's say you were to get in right now and use the fair value gap as a stop loss. Let's see how that would have gone for you. And by the way, I generally don't remember what happens here, but I'm just saying, like anytime you break consolidation, you want to break it with a fair value gap, and then you might want to use that same fair value gap as your stop loss. Not a bad setup to take. If it doesn't work, I mean, you're risking a little bit of money to make a lot, because if it really breaks down the order flow is bearish, you targeting these lows. I think the risk to reward is there. Like, even if we just did that alone, the risk to reward is certainly there. So then you could take that trade. All right, so let's see how this goes. Was the price ready here yet? All right, no, it wasn't ready. So there you go. You would take a loss on that breakout. And to me, I would look at this as like, okay, I'm gonna stay put in here because we're still consolidating. All right, cool. So is price gonna move to the upside? If it was gonna move to the upside, you would want to see it respect this fair value gap here, right? There's no need to trade past this if you're actually bullish right now. And so based on the fact that we swept the sell side, which is the bottom part of the consolidation, and we just swept the buy side, the higher part of the consolidation, like I said, this overall area, I would stay cash in. Okay. All right. Absolutely. And like Capitol Hill said, study the losses. Those who know how to lose will eventually win more than they lose. Absolutely. I appreciate you saying that. It's very true. It's very true. Um, and and by the way, I want to make a quick point in that. It's like, so let's say it goes back in our direction right now and it breaks all the way down. You're gonna be like, man, I should have just held. You know what I mean? Like, why do I have a stop loss here? I'm telling you right now, people, you have to trade a system on like, it's a healthy system to trust the fair value gaps on the consolidation break. If it goes like this right now, cool. It's gonna work out this time. I promise you, next time it doesn't hold this fair value gap, and it's gonna keep going, and it's gonna go, and it's gonna make all-time highs, and you're gonna still be holding. You be like, oh my God, trust me, you got it. It's okay. Stop losses are there for a reason. If you trust your system, you know that more times than not, it's gonna work out to your benefit. Okay, so let's see if it's actually ready to break down now, because price clearly wasn't ready before. All right. So think about how many people they just faked out with this whole sequence. They faked to the downside, fake to the upside, fake to the downside, fake to the upside. Now they're back to the downside. There's a lot of stop losses that got destroyed in this area. And that's why I said, personally, I know that if we were ready to trend to the downside, it would have respected this green rectangle. And if we were ready to trade to the upside, it would have respected what I just circled right there. Okay, if neither side got respected, this whole area to me becomes very suspect, and I need to see real energy to tell me like, okay, price is ready to break down. Okay, so I just kind of look at the whole area as like, yeah, let me stay away from that. All right, so price is moving really staggered. It's moving down, but it's really moving staggered. Nothing too eventful here. I don't trust movement that looks like this because it usually gets swept. I always tell you guys, I don't trust movement that staggers down like that. Like, that's not something that I like to be a part of. I like clean, smooth movements. Okay. So see how this works out. All right, price is starting to move a lot smoother, and I like this movement. So here, there might be reason for someone to get involved, anticipating that price is gonna run into these lows. So this is preference here, where if I was getting involved here, I would probably get in now with a stop loss slightly into this consolidation, just because if we're gonna break down into these lows, there's no reason to basically do this. Usually when price is finally ready to break a consolidation type area, it just goes. How many times have you guys seen consolidation turn into aggressive moves? That's because after consolidation, it's just gold. It doesn't usually have like a deeper retracement after the breakout. After the breakout, the retracements are usually pretty short-lived. So I wouldn't want a deep retracement back to these highs or something like that. That's not how I want it. So if I were to get in, I would get in now and target those lows with a stop loss slightly into the consolidation. Alex said consolidation leads to range expansion. Pretty much what I'm trying to say. All right, so that's just another way to put it. Appreciate you. And then we break down, and there you go. Oh man, dang, they broke the heck down, right? So that's when this is literally the perfect visual of what I was getting at, where it's like when it's ready, it just goes. Like it might stagger at first and this, then and the third. I don't like the movement like this. That's why we got this flash up. But when it's ready to go, it's going to go straight like that. And you see these previous double bottoms, those are targets when order flow is bearish. And when order flow is bearish, it looks like this. And these moves are like the moves I like to trade the most. All right. So now we come into this area. As I told you, if we're gonna run these lows, let me show you these lows in the middle. Remember when I ignored those lows in the middle? I said, I won't even mark that because to be honest, if it runs this, it's very likely to run into the inefficiency below. So I'd rather just mark off the green area instead, which is a hourly fair value gap in case you came in late. This green area is an hourly fair value gap, a bullish one. So yeah, notice that price bypassed those lows in the middle and went straight to the hourly fair value gap. All right, so now we have to see, does price want to respect that hourly fair value gap, which is a bullish one, or does it want to blow past it and show us that price is indeed bearish? And then guess what we have below? We got more targets. We got yellow line, we got yellow line. All right, so let us find out right now. Now, I have a question for people who've been with me for a little minute now. If I have an hourly point of interest, what time frame do I like to see validation on, confirmation on? It's an hourly point of interest. What time frame am I looking for confirmation in? So I see 5, I see 5, I see 5, I see 5. Appreciate you. SSK, you correct. Yup, the 5-minute. Pamela, everybody. Morley, yup, smooth. Good stuff, y'all. So exactly, you want to see the 5-minute confirm that trade. And just for clarity, and this is hard to explain, but like even if I'm looking at 5-minute confirmation, I still find my entry on the 15-second. And you might not see how I put that together, but people who trade live with me, they probably have seen me in action doing things of that nature. And also like I've explained it in the past. It's just really hard to explain sometimes. It's almost easier to show. But basically it's like even with a 5-minute inefficiency that I'll be basing my play on, I'll have my screen split in half. The left side might be looking at the 5-minute, the right side might be looking at the 30-second or the 15-second. Because those time frames turn over first before anything else. Like, let's say price was going to reverse right now, right? Like, let's say this V-shaped reversal happens right now. Do you realize that on the 15-second time frame, it's in a downtrend, and then the 15-second is going to enter an uptrend? And at this exact moment, you don't really see that looking at a 5-minute. You don't see that looking at a 1-minute. You can only see that reversal happening on the 15-second. Basically, is what I'm trying to say. So I'll be watching that time frame for the earliest indications on me getting in. And if we're indeed supposed to go bullish from this area, whatever bullish order flow is developed on the 15-second, I'm expecting those PD rays to be respected. Some of them I don't want to get touched, as in, let's say we make a fair value gap to the upside. Sometimes I don't want that to get touched. Sometimes I want it to be left below me as we move higher. Other times I do want that fair value gap to get touched and respected. And if it's not, I already know it's a fake reaction. It's going to end up trading back to the downside. But nonetheless, I always have 2 screens up when I'm taking any given trade, because I need to see what I like to scan time frames even while I'm entering something, just to make sure everything's in order. Because like I said, price it's all a story. All the time frames are working together to make up a beautiful story. But easier shown than said, to be honest with you. All right, but we're on the back test right now, so I can't really do that. All right, so look, 5-minute, boom, we got this. We got if we're bearish, right? If we're bearish, I would say that this fair value gap would get respected, right? Like if we're bearish, I would say this would get respected. It's hard to say you're bullish for real in this scenario until price basically invalidates the upper half of this. So many a time on these classes, you beautiful people in the room have heard me say, hey, a bearish fair value gap, right? We want to see if price can respect the lower half of it. Meaning if price comes into this bearish fair value gap, it should respect the lower half and come down. And this is an example of where I'm telling you, in this specific scenario, actually, we want to see if price can respect the upper half of this bearish area to come down if we're indeed bearish. This is not a lower half type of scenario. So please kill it in your brain right now. Destroy it, burn it. If you think that every bearish fair value gap, we need a lower half reaction, just burn that. I never said that. It happens like that a good amount of times, but it's not always like that. It's not an absolute. So please destroy that. I never said that before, but that's people's biggest misconception coming into this. In this scenario, I'm really not bullish until we basically destroy the entire fair value gap. This case, price is liable. Price could do that. Price absolutely could do that, just so you know. All right, so anyway, here we are. We get a nice reaction. Once again, what I just discussed to you is confirmation through invalidation, which means I want to see price invalidate a bearish fair value gap. That's one thing I want to see. We talked about this last week. I want to see us invalidate a bearish fair value gap right now. I also simultaneously want to see us create a bullish fair value gap. So just reiterating, there's two different ways to view this entry. You can look to see if price can invalidate something that's bearish, because if you're invalidating something bearish, that's a good thing, right? Yes. All right. You also want to see if we can create something that's bullish. You want to simultaneously create a bullish fair value gap to the upside. So that's two different ways to confirm this play. Let's see if we can get a bullish fair value gap. All right. So far, nothing, right? So I haven't entered the play yet. I'm not on the upside right now. For all I know, we might reject this fair value gap and come back to the downside. All right. So let's see what happens here. All right. So far, it's not looking too hot. I'm still cash. I never just enter a play because we're in a point of interest. I personally, 99% of the time, I'm gonna wait for some type of a confirmation. All right. So no confirmation for me, no play. All right. It's consolidating right here. Guess what? I'm cash. Cash right now. Cooler. All right. I mean, we still consolidating. Nothing to take. Respecting this. And by the way, where does consolidation happen? Between two valid PD arrays. How many times I gotta show you that example? That's what consolidation tends to happen. So we waiting for some type of expansion in either direction. Right? Nothing so far. Nothing so far. This is where consolidation tends to happen. Nothing so far, people. Like, yo, is price not consolidating between these two PD rates? This is exactly what I'm talking about. So we chilling right now. We chilling. No confirmation, no play. All right, that's a good sign right there. I like that expansion over these highs. That's good. We push it to the upside here. If you want to be risky, you can get in right now, right? And have your stop loss, I'll say, slightly below the wick on the left, because this is an entry that I've introduced to a lot of people, where in certain scenarios, I anticipated fair value gap being created. The reason why I might anticipate a fair value gap being created in a scenario like this is because in certain situations, right? In certain situations, if we do create a fair value gap right here, right now, this very same fair value gap will not get traded back to. So like we'll create it, right? And we'll just keep moving on. And so like that means I literally got a sniper entry with no drill down, because some fair value gaps, I told you this earlier, some of them you do not want price to come back to. That's a great sign. So if you want to take that risky entry, you can do so, you know, and then you'll have like I said, no drill down, because price not gonna come back here. And any type of retracements will exist above you. They'll exist right up in here until we meet an objective. Until we meet an objective. That's very important. All right, so let's see what happens here. That fair value gap gets created. Just trying to get my mouse thing. There we go. That's the fair value gap. It's created. You're already in the play. You may keep your stop loss where it's at, because just in case price does want to come into it, it is a fair value gap. In this case, I would want the upper half to work on this and take us to the upside. And so I may move my stop loss up maybe to about right there. If I was taking this trade in real life, that's how I would trade it. My expectation is to not use it, but if we use it, we need to respect the upper half. That's my expectation. If we come to the lower half, I already could tell I'm probably wrong. All right. So that's how I would take that. I like how we're coming off of this hourly fair value gap. Notice that the 5-minute is starting to potentially confirm for us. We still have to worry about the upper half of the bearish one. So we got one form of confirmation. We're looking for a deeper confirmation by crossing over this area. If we could cross over this area, I like it. I ain't gonna lie, I like it. If we can cross over that area. All right, this is looking good so far, right? We're not rejecting this fair value gap so far. Things are looking good. Let's see what happens. All right, we starting to move on. I love it. I love it. No drawdown gain so far. We move past this area. To me, at this point, I'm just bullish. And so I know some of you are looking at this fair value gap right here, and you're thinking, yo, Rel, what if price rejects this and goes to new lows? And my response to you is, this fair value gap is irrelevant in context. It's irrelevant in context. And so one quick thing I want you to remember for the rest of your life is that a lot of fair value gaps are irrelevant as far as taking price down or up. A lot of them really are just gaps. What is the third word in the phrase fair value gap? Right? What is the third word in the phrase fair value gap? It's a gap. So the way I look at this is a gap. Like iPhone said in the chat, it's a gap, indubitably. You know, I'm not tripping on this. This is not something I want rejections on. And so sometimes I go on social media and I see people, failed smart money traders, say things like, fair value gaps are stupid. That stuff doesn't work. And I'm just like, you just take the wrong ones. And so you're frustrated, and I get it. You were just incorrectly taught. And like somebody is going to teach them that this one is supposed to take us to new lows. And I would tell them, no, it's not. It's out of context. Actually, this is going to get traded through. Don't mean we can't get a reaction from it. But if we get a reaction from it, it'll probably just send us to the green one and go higher or something. But it's very unlikely that this would take us to the lows. Like I said, the only chance we had of going lower was the one we initially talked about. This joint right here that's not it. That's not it. Like Tiffany said, the mentorship teaches the right fair value gaps. She said that's bae. Yeah, all my mentees love fair value gaps because it's really the best tool in the market. Like it tells you so much. You could use it in so many different ways. But that's a whole nother story. All right, so let's see. We getting a reaction from it so far. And let's see what price does. It's largely consolidating right now. And then it breaks. Oh, well, sheesh. You see what I'm talking about, right? So we not worried about this. Even if it causes a little reaction, cool. Maybe if you scalped it, congratulations. But if you follow the dominant direction of the dominant trend, you know what time it is. You feel me? So once again, yes, I know. You're gonna be like, yo, Rel, if you would have just got in when we touched this, we would have had even more money. And I'll tell you to trust your system, because there's many times where you would think that we're gonna bounce here, and then price is gonna do this and keep going lower. And you're gonna take a loss for no reason. And I'm gonna tell you that you're being eager, because you should have waited for price to confirm that it wanted to use that hourly bullish fair value gap first. Why is it out of context? That, I ain't gonna lie, I can't really get into that detail, because that detail has to do with my BT4 strategy, which is something I detail in, well, something I go in detail with in a mentorship. So I try to keep certain concepts for my mentees. I teach a lot of free stuff here, so I hope you don't mind. I try to teach a lot for free, but I gotta keep certain things in the chamber. Fair value gaps, my understanding of fair value gaps is very unique. And that's why people learn fair value gaps from me, and they never go to anybody else after that, because the way I understand them is a life changer. All right, so I try to keep my fair value gaps knowledge for the most part in my mentorship, but I still give as much as I could for free. So I hope y'all don't mind, you know. So yeah, this one is out of context though. Yeah, I appreciate your understanding, bro, for real. And so we pushing out of here. Well, yeah, we ran to the first target already to the upside. I hope you guys can see what I mean with when order flow is bullish. You see this lower high is a target. 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 But guess what? We got another one. DJ Khaled, another one. So let's see what we got. let's see. We got if I mean, matter of fact, let's try. Let's make good practices. Let's take one off the table. Um, let's take one off the table right there, locked in some profit or whatever, right? And then we keep it moving and see if we can get to the other targets. So now we got a fair value up that just got created right here, by the way. Definitely want to see that respected if we want to keep going higher. So you could trail your, oh gosh, I pressed the wrong button like an idiot. Oh my gosh, it just annoying me. Dang, y'all, that pressed the wrong button. I almost want to, matter of fact, I'm going to do it. Nah, they not going to get us. I'm going to go ahead and enter this play again because they trying to play with us. Hold on. Hold on. Because they trying to play with us now. Hold on. we gonna get it in. We're gonna get it in. I want to get right back to where we was at because I'm trying to like scale in and everything like that. Trading view be lagging sometimes though. I feel like I pressed that button mad times. Come on, come on. Where's that monster candle at? Facts, that was what people call the FU candle. They wilded out with that. There we go. Okay. Um, it depends what account I'm trading. SK. Weekly water commercial break. Facts. All right, so I'm gonna go ahead and trim that contract like I said that one time. That's that. I think what I was getting at was basically you can even trail your play a little bit. And let's say like right now you trailed it to like right here or something. That's fine. However you want to go about that. But you know, you don't have to keep your stop loss where it's at. You're severely in profit. We already took one off the table. We're looking for higher targets. And we do want to see this fair value gap work if we're gonna go higher. All right, so using fair value gaps to guide your trade. People have a hard time holding trades. This is an example of how you can potentially hold a trade for some higher profits. And there you go. That's the second target going right there. Um, for me, at this point in the play, I don't want price coming back down to this fair value gap. So I would actually trail this even higher, maybe to even like right there at this exact moment. That's how I would trail this personally. All right. As this case said, I'm sorry, I don't know your gender SSK, but if like I'm gonna say he or she said you'll take 10% and leave your runners at this point, nothing wrong with that. You know, however you take profits, I can't be mad at it. You taking profits, right? For me, I like to trail my plays based on PD arrays. I like to trail my plays with fair value gaps largely, right? Now, personally, when we get to a liquidity target such as this, my strategy personally, I'm not on the 5 minute. I'm gonna be real, child. Whenever we get to targets like this, I am on a much lower time frame. I might be on the 30, the 1. It depends what time frame I got my target from. Like being that I got my target from the hourly right now, I'll trail this with 1 minute fair value gaps typically. All right. But here we are. We on the 5 minute for the sake of the exercise. All right, so we what you call it? You know, we ran that so far. We coming back down. What do we have to protect us at this exact moment? We have a fair value gap right here. We can see that's protection. We also have a small one right here. My preference is the one above, but we'll keep our eye on this one. Stop loss is like where it's at. You could even slide it up a little bit if you want to. And let's see what happens here. All right, we trade into the one below. So we bypass this one. Let's see if we can keep holding this trade. If it comes down this low, I might just take profits where it's at. Okay. All right, so it's using the one in the middle so far. Consolidating. Okay, okay. Going sideways, going sideways. So far. Still sideways. Chopping, right? A lot of suspense, but we're protected, right? We got stops and profit. We're gonna make money anyways. We got an inefficiency as our protection. The reason why I gave it a little space is because with fair value gap, sometimes we could wick the fair value gap, but the bodies will still close inside of it. And with fair value gaps, you want to see bodies hold the area, not wicks. So that's why I have my stop a little bit away from it. All right. And so yeah, we starting to break back to the upside here. Looking for this, looking for this breakout above those highs. Ideally, nice breakout so far. come back in hard. At this point, to me, I wouldn't want to see it come back under these lows. I would like to see it get respected in this general area. I would probably move my stop up right there. All right, maybe even a little bit higher, like right there. Because if it goes to that body, it's gonna run the rest of those lows. This is how I would trail it in real life right now as we pursue higher prices. Okay, but I hope you guys see how we're trailing. We're trailing the play based on fair value gaps. What are we holding the play based on? The hourly. And I feel like 90% of you forgot that already during this exercise. 90% of you forgot why we're holding it. We're holding it because the hourly told us if we come into here, we're gonna enter bullish order flow, which we're clearly in bullish order flow now, right? And all those lower highs from before become targets, especially this one. This one is these two are like a little bit more of a stretch for me. I would love to see those. But this section right here, yeah, nah. That's something I expect to get taken during this price leg, okay? I don't hope and hold anything. And so that's why I said, if we were to invalidate this area, I would just take profits and get out of the play. But the reason we're holding this trade still is because the hourly told us where we're supposed to go. The higher time frame is the hourly. We're trading it by holding 5-minute PD arrays. We good? Are we good? Are we good? Can I get ones and twos if you understand what I'm saying? One if you understand it, a two if you're like, nah, you lost me, game. I'm getting one so far. One so far. Okay. Appreciate y'all. Whole lot of ones in the chat. I'm gonna trust y'all. I'm gonna trust that nobody lying to me. I appreciate y'all though. Thank y'all for the feedback. Cool. I'm gonna trust that nobody lying. So everybody on the same page. Let's keep it moving. Let's keep it moving. Bet. All right. So far, they might be Caesar, but sorry, we gotta move on. Never be afraid to ask a question in my class, people. Ever. I love questions. Love questions. All right, we holding it so far. It's making us a little nervous though. But all right, it's starting to push up. So perfect. All right, so look, at this exact moment, I always look at the market from a bullish person's perspective and a bearish person's perspective. So if this was indeed a sweep of these highs, let me use a different color here. Look, if we were just trying to sweep the white line and come down lower, you see this fair value gap that we made right here? First and foremost, we wouldn't even come back to that a lot of the time. But if we did, we would come back to the lower half of it. And so by the fact that price is even in the upper half of it, even without the invalidation, like I know y'all can see that we invalidated and everything, but even without the invalidation part, I already know that we're not bearish by the fact that price came right here. I already know we're not bearish. So when it comes to knowing if you're wrong or right really quickly, once again, a deeper understanding of fair value gaps can really help you with that. But I already know, like, oh, now we're not bearish. Just based on that alone, I already know, like, the bearish people in the room, they mad right now. Like, if I was a bear and I got in puts or shorts or sells right there, I'll be very mad as a bearish person to see price come back to the upper half of that fair value gap. So being that I'm bullish right now, clearly, where do we enter at? Down there, right? Being that I'm bullish right now, I'm happy, okay? Steph said highly upset. Yeah, I would be highly upset if I was in bed right now looking at that. All right, so there you go. We make a higher high in the market, which would have stopped out a lot of the bearish people right there. Like I said, it's still a choppy move. So that's what's making me nervous as a bullish person, is the lack of energy to the upside. I don't like that as a bullish person. All right, but we're so close to my target. Boom, we run the target. Smooth. Okay, me personally, how would I trail this in real life? I don't want to see price invalidate this bullish fair value gap right here. So this is how I would trail it in real life. I want to see this respected. If it's not respected, I'm going to exit the trade, especially because we got to the main target for me is the one we just got to. I'm gonna be real. Like, that's the one I wanted the most. Everything else is just extra chicken. Feel me? Extra chicken. All right, so let's see. This is our play right now. Got entries, good holds, all that good stuff. Let's see what's going on. All right. How many targets did I mark? I don't remember, but I marked all the lower highs on the hourly. So there was a series of lower highs on the hourly. If we use that bullish fair value gap, I know that all those lower highs will be the next target. So that's why I marked those off. But I don't remember the number of highs they were. Apologies. But here we are. We're still staggering to the other side. We still got this inefficiency. I might even move my stop up like right there. Still trailing it. I don't like stagger moves. They make me nervous. Cool. We move into the upside here. If we can make a fair value gap, I'll move my stop up. No fair value gap. I'm gonna keep my stop where it's at for now. All right. See, they came back and took back this whole choppy section. This is the moment of truth, right here, people. The moment of truth. All right. All right. So hold on, right quick. All right. Cool. So here we go. All right, me personally, I'll take my stop and profit right there. I'll be out the trade because I don't want to see what happens after that, especially looking at this whole buildup. They might take that whole section right now. I'm not saying they will, but they might. And so I don't want to ever hope and hold the trade. For me to remain bullish, I would have wanted us to low-key respect those two red candles low-key. But I would have wanted to see us respect that fair value gap. So me seeing both the red candles and the fair value gap get disrespected, I'm out of there. If they keep going, they keep going. That's cool, but they got to do that without me. And so you can see bodies held the fair value gap so far, but they wick me out. Am I tripping about that? No. Because on another play, it would have kept going. So that's what I don't care about anything besides my system. I trusted my system. My system has changed my life. So I'm going to continue to ride my system. All right, so let's see what happens here. All right. Still going sideways. We clearly out the trade, but you see they going sideways here so far. I was trading to move a little fast. If you hear me clicking, I'm clicking aggressively right now. They've been chopping in here before they just moved higher so far. All right, I might have pressed a lot more than I wanted to. What I will wait for now is the breakout of Buddy's highs. I think a Buddy's highs will fly to those yellow lines. So hopefully I didn't press. Okay, cool. I think it actually stopped. All right, cool. So what I would do is wait for the breakout of those highs. If we're really going to move higher, I think if we break these highs, we're going to fly. We need to break it with actual aggression. So let's see if they could get there. It's taking so long, I might just show it. Let's just see how it, because TradingView is annoying me right now. TradingView, I don't know. Sometimes it just moves like slower than normal. So this is what ended up happening in that section, people. I want to see the breakout of Buddy's highs. It got to be a real breakout, not a wick. See, we're not really worried about that wick. Okay, once we broke those highs in a real way, what did it do? It flew to the yellow lines. So once I peeped that we're in chop like that, right? We're not really aggressively moving above highs nor lows. Let me point that out real quick so you know what I'm looking at. So where did they stop me out at? I don't remember where they stopped me out at, but the point is you can see that we set lows right here and we set highs right there, right? You guys noticed that we were kind of juggling in between that. We had a false break to the downside. We also had a false break to the upside. So I look at this whole area as like, oh yeah, nah, I don't want to trade in here. It's gonna chop anywhere in between that. So I just stay away because there's no reason we should sweep both sides. If you sweep both sides, you're probably looking at chop, right? All right, so cool. False break right here. We come right back into the range. We still chopping in between. Still chopping in between. I'm open to sells under the low. And I'm open to buys over the high. Anything in between, I'll stay away from. I mean, look at what I stayed away from. This is not clean price action. This whole section is extremely ugly. Like, it's uglier than me. So that's how y'all know, like, this thing is real ugly. You feel what I'm saying? So then, boom, we push past these highs. And then we actually flew in one direction. That's what I like. Like, once we really break the consolidation, it's going to be an aggressive move, as I told y'all. And you can see, like, it was a straight line move to the last target. And then, yeah, this is today, right now. This is what's going on. All right. So hopefully you guys at least pick something up from that demonstration. This is the hourly outlook of what we just traded. You see how we swept those lows, tapped into the inefficiency, and ran past all those lower highs. All these lower highs. Let me circle them real quick in case you forgot. All of these lower highs got ran through. Once order flow flipped bullish. Okay. Give me one more ones and twos. 1 and 2. If you got something from it, can I get ones? Can I get ones in the chat? If you got something from that. If you ain't really getting nothing from that, or you feel stuck or something, put a 2 in the chat. So I'm seeing all ones so far. Appreciate y'all participation, of course. Smooth. Appreciate you, iPhone. Appreciate you. That's dope. All right, all one. So good. That's what's up, man. Shout out y'all for locking in. I hope y'all was able to pick up some gems from it. The worst thing that can happen is you learn some. And let's keep this class going. Let's keep this class going. So that's that demonstration. I believe it's time for the chart debate. Oh man, it's time for the chart debate, my people. It's time for the chart debate. Let's see what we got this week. All right, so let's see what we got this week, man. The chart debate is right here. This is the chart debate I put out this week. Look at it if you haven't gotten a chance to look at it. If you're watching this on YouTube, maybe pause the video and make a decision. Are we going to line 1 first? Or are we going to line 2 first? All right, so free people, my free community, people who've never taken my mentorship, they say line 1 is where prices are going next. 50 people out of 68 said line 1. So this is overwhelmingly the most popular answer for the free people. And let's see what the mentees are talking about on this one right here. So the mentees, what y'all think? What y'all think, mentees? Let's see what y'all got. All right, so mentees, you guys actually agree with the free people. 19 out of 30 answers. And mentees, some of y'all didn't answer the question. If y'all watching the class, you didn't answer it. I don't know why I gotta notify y'all 55 times just to get an answer, because you answer the chart debates when they get put out, please. Anyway, so 19 out of the 30 mentees that answered chose line 1. So it looks like they be trying to get me tight for real. It looked like line 1 is the most popular answer today, but is it the correct answer? Tee-hee-hee. Today I'm drinking water. There's a quick commercial break before I reveal the answer. Today I'm drinking water, and I know last week I tried to talk to you guys about being healthy. Okay, I just got back from the gym. I worked out. I'm drinking water, right? It's time to get your health right, everybody. You got a healthy mind. You got a healthy body. You're gonna have healthy trades. Okay. My name is BACKTEST, and I'm an advocate for drinking H2O, hydrogen to oxygen. I don't really know what to say in this commercial, but definitely stay healthy. You feel me? Say I love you to your loved ones, and pray out and happy Easter. Okay. All right. So I can't name the brand of water that I'm drinking because that's free promo and they ain't paying me no check, so I can't do that. My fault. All right, let's reveal the answer now. Okay, let's get into it. The answer to today's chart debate is line 2 ski. Yeah, the mentees got it wrong. Oh my God, y'all not going to hear my mouth tomorrow. Yo, y'all so lucky tomorrow starts a brand new mentorship, because I would, y'all don't even know. I gotta play nice. We got new students in the room tomorrow. I gotta play nice. I can't scare them away. But yo, old mentees, dude, man, y'all got me mad this week. You guys got, what, this is the second one y'all got wrong in some months. That's why I try to cut y'all slack. Maybe the second and third in multiple months. I cut y'all slack because y'all get most of these right. I'm not gonna lie. But whenever you do get it wrong, it annoys me. Like the last one you guys got wrong was based on the same concept. This is based on people. You guys got the same, it's the same thing that I got the last one wrong on, the same concept. Like how many times I gotta drive this concept home to you for you to understand it? I'm trying to play nice. I'm trying to be nice up here, so I'm trying to keep it inside with people. I'm like, man, listen, like, bro, these highs on the left, Like, do y'all like? Come on, man. I can't even elaborate how I want to. Just I'm gonna talk to y'all in class though. Y'all really killing me with this, bro. Ugh, gosh. I can't even let it out. I'm gonna scare everybody. Everybody never gonna come back here again. I gotta be a nice guy. But line two won this week. Shout out the 11. And then shout out the free people that pay line two as well. That's what's up. But Menti, yeah, this week, y'all let me down. Never talk to me again. That's it. Mentorship over. All right. Nah, so let's get into predictions on what we got coming up in the market. Okay, before I keep throwing my fit up here and y'all gonna judge me. I got left back in the winters. People want to retake it, pull up, retake it. Drive it home. Hey, I'm gonna see. But tomorrow y'all might see a different side of me. But let's get into the second part of class. What is to expect in the markets this week? That's what we're about to talk about. So before we get into like any type of trading, we need to know the best days to trade. And so let's see what the economic calendar has for us for the week of April 20th, April 21st. All right. It doesn't look like it's too eventful this week. I'm not gonna lie. Monday has nothing eventful. A bunch of Fed speakers on Tuesday, which is usually like causes some consolidation in the market. Wednesday we got PMI. I don't know. I forgot I heard something. For Wednesday we got PMI, which is a decent news event, but it's nothing crazy, nothing that's going to shake the market too much. But be careful on Wednesday of a 9:45 a.m. Flash candle. Be careful about Wednesday at 9:45 a.m. Eastern. Thursday is nothing to talk about for real. And Friday is consumer sentiment, which is another decent event. Maybe a flash candle, but nothing like the market is not going to be held up in consolidation all week based on PMI or consumer sentiment. All right. So Terrence said, so check on Sundays for the week ahead on this website to see what's going on with the market. Correct. On Google, type in Market Watch economic calendar, and you'll be able to see this exact thing. But definitely every day you should know exactly what's going on news wise. Don't ever enter the market without knowing if there's a news event to be worried about, because you might be in a beautiful trade and then you get a news candle that just destroys your entire account. Please. Student of the chart said, Netflix crushed earnings. Do you think that will give energy for tomorrow? Based on Netflix alone, not necessarily, especially because the market is in consolidation based on the indecision on what Trump is doing with tariffs. That's really what's causing the consolidation. I don't think Netflix earnings alone is enough to really break that, but it is a good sign for upside potential. But there's more tech earnings coming that we need to look at before we could like really say overall tech is doing well in this crazy environment we're dealing with. But it's something to keep in mind. All right, so let's really see what's up. And I'll tell y'all my analysis on NASDAQ in a little bit, but I got to show some love to the Forex people right quick. So can we go to the dollar? Plus, the dollar really frames all markets. Like if the dollar is in movement, everybody, please check out mics. I feel like somebody off mute. I don't know. Hold up real quick. I guess everybody's good, I guess. Yeah, I don't think I hear it no more either. I bet. So, okay, where we at? Forex. So a lot of markets don't move until the dollar moves. And you see, last week was a lot of consolidation. Look at the dollar last week. It consolidated. So now that the dollar's starting to move, maybe that's a good sign for the rest of the market to make some movement. So my draw on the dollar, I actually gave this to you guys last week. It just went sideways, so we haven't seen it develop. But I told you guys I'm looking for the dollar to come into this monthly bullish fair value gap. So you want to have this on your chart, this monthly bullish fair value gap. I don't know why I wrote MVI. Why did I write that? It's just a monthly bullish fair value gap right here. So BISI is a bullish fair value gap, by the way. So monthly, basically, I think it's drawn into that, so it has more downside. And I told you guys I made this whole watch list yesterday, so I didn't even know it was gonna gap down today, but you can see it did gap down today, and we're looking once again for price to come in here. This is last week. You can see last week was pretty uneventful, but we're making it to this. My bad. We should be making it into this purple destination real soon. Do I think we're gonna like rally from there? No, I'm not looking at that as something to reverse on. I'm just looking at it as something that's an easy target. Okay, price very well could like blow past that. And why do I say that? Look at this on the dollar, right? Peep this. On a monthly, we had this bullish fair value gap. And as I told you guys, that is where consolidation tends to happen between a bullish PD rate and a bearish PD rate that are both valid in context. And they are both valid in context. Price could have used either of these to go higher / lower. And because they're both valid, yeah, that's why this is the monthly time frame. Please don't ever get it twisted. This is the monthly. We've been consolidating here since the end of 2022. Y'all realize that it's 2025, right? We've been consolidating here since the end of 2022. So what's significant to me and what's interesting to me is how we're finally starting to break this area. We're finally breaking this monthly bullish fair value gap recently. Look at this. We finally losing that area. That's very, 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 very interesting to me personally. I'm like, wow. On top of that, I told you guys about a setup where if we consolidate, in other words, accumulate, right, they tend to manipulate and then they distribute to the other side. So this looks like an AMD setup. Accumulate sideways, right? Accumulate. Manipulate is a fake move. And then distribute is the actual direction that we want to go into. And you guys may remember me calling for a massive drop on the dollar since right up in here. Up inside of this area is what we call it, for a massive drop on the dollar, and you watched it happen. And I told you guys when price was up here, I said, yo, it's interesting because the dollar is about to have a massive drop. I said, yo, remember many, many classes ago, I told you guys, I said, yo, this could be a potential AMD setup. And we've watched over the past 2 or 3 months, price develop this AMD setup, and we'll see how far lower it wants to go. To me, after this purple area, it gets real spooky for the dollar. It's such a bold statement to say it's going to take this whole area and run sell side. That's such a bold statement to make, but I'm not going to lie to you. It's very possible, especially after massive consolidation like this into a manipulation distribution. Literally looks like that a lot of the time. So don't be surprised if that were to happen. And plus, I've made I've made bold claims on this channel many a time, and I ain't gonna lie, I haven't been wrong about any of them. So if I'm making a bold claim, it's probably because I'm really seeing something on the chart that really makes a lot of sense. So once again, I'm not like super standing on it that the dollar is gonna run all of this, but I'm just letting you know it looks very ugly under this purple area. It does look very ugly. We'll take it a step at a time though. Under this purple area, the next place I would aim for is the lowest body of this candle. You have this on recording, so if you forget, you can come back to the recording. March 2022, I will go to the lowest body right there and call that my next target. All right. So under the purple, I got that as my next target. We'll take it one step at a time. Okay, that's the dollar. And real talk, Capitol Hill. And when gold goes up and the dollar goes down, and gold definitely has a lot of upside, which is something I'm gonna get to too. I'm also bullish on gold. I haven't even looked at gold since the market opened, but I still have an upside target on gold. I'm looking for AMD setup. Yeah, AMD setup, Hawkins, is what I was saying, where A stands for accumulate. That's when we go sideways. M stands for manipulate, which is when they fake a breakout, right? They fake you one way. The D stands for distribute, where they aggressively distribute in the other direction. All right, so A, M, manipulate, D, distribute. All right, that's what that is. No problem. Caesar said, a weak dollar is bad for imports. Aside from tariffs, you lose purchasing power. Indubitably. So we got even like some fundamentals to back what we're talking about here. So, we got some downside direction on the dollar potential. Let's look at some Forex real quick. and then we'll get right back into futures and all that stuff. For euro, like I said, last week consolidated, but last week we were aiming for these highs right here. It looks like it's about to get there any second now. So we'll be looking at those highs, and being that I have more downside targets on the dollar, I would be looking at upside targets on euro dollar. Okay, so like I said, these highs look good. Next place I will go is on the weekly chart. On the weekly chart, I would take the highest part of the body on this green candle, and I'll put a horizontal line right there, and that'll be my next target here on Euro USD. Okay, so after this target, I will look for that. But either way, I remain bullish on Euro USD, and ultimately, I don't want to see it come back through this consolidation. Like, I don't want to see it lose these lows. It needs to, like, if it were to even come back down, I don't want to see it run these lows. I actually am expecting the move to happen, like, largely right away. Just pretty much straight to the upside. I don't want to really see a retracement in this context right now. Just double check something. Yeah, it gotta look. So, like, what I'm looking at is how on the daily we're using this daily bullish fair value gap. Let's run these highs and get up out of here. I don't want to see us come back through here. First of all, I don't want to come back and use this twice. Also, I don't want to see us invalidate that, obviously. If it does, it has a chance to use the lower half of this one right here. It has a chance to use that, but like I said, I'm not trying to see that. I actually just think it's going to continue higher right away. It already retraced into an inefficiency. Let's go ahead and take those highs and go for the next target above. All right, euro. I'm out for British pound. So pound dollar here. We ran past our first target. Beautiful. Last week, I gave you guys a bullish order block play, and you can see that it played all the way out. It's a very nice bullish order block on the hourly, and it played all the way out, and it continues to play to this exact second. And so that's smooth. That played out from last week. And I'm just looking at these highs still, that 1.3434. I'm looking at those highs still on British pound. We got New Zealand dollar here. We were aiming for this monthly. Look at this. See this? This is our target to the upside right now. After this sweep, we aim for the upside. I mean, you see, where do I not want to see price come back to? So I don't want price come back to either of these fair value gaps. Not this one and not this one. It needs to maintain upside right away into this blue area. What do I draw on the 4 hour here? 4 hour busy. Yeah, like this is fine. So notice that price is using this bullish fair value gap right now to go higher currently, and I want to just see it maintain that upside. Same thing. I don't want it to come back to this 4 hour fair value gap we already used and made another one. That's good. We're still in bullish order flow. Bullish order flow is seen by price not just creating fair value gaps, but tapping into them and creating more. So we created one right here, right? We tapped into it, and then we created another one. That's good. That's beautiful. That shows good bullish order flow. Let's continue to see that. We have a target above. Once again, go to your monthly time frame and target this bullish. Target this bearish fair value gap. Now, do I expect a reversal here? Like, is this my expectation? No, it's not my expectation. Why do I have it marked? Because it's an easy target. That's why. So that's just an easy target for us to the upside. I think price definitely has a chance to push past this easily. So, but we're gonna take it one step at a time. We almost done with Forex here. Weekly busy, what I have here. All right, yeah, I mean, we still have this target to the downside on USD CAD. We sniped, honestly, everything Forex, I don't even trade Forex. I do this for you guys. Everything up and down on Forex for months now, we've been correct on. It's been very rare that we came out here and said something wrong on Forex. Like, we called this whole rally, we called the sweep, we called once price loses this area is going to get bearish. What happened when we lost this purple area? You see how it's looking. And so now I'm aiming for this purple area as the next destination. So I would stay bearish on USD CAD into this purple area. Where do we not want to see price go back to? Price shouldn't see the upper half of this red area. To be honest with you, I think it's going to go there right away. But my emergency area, I wouldn't want to see the upper half of this fair value gap right here. It shouldn't see the upper half of that. All right. But I think it's just going to keep breaking down right now, to be honest with you. Even right now, personally, I want to see it maintain this downside. I'm not really trying to see it disrespect these highs right here. All right, I want to see it just keep breaking down into the purple area below. All right, so that's a low hanging fruit objective, which is just easy targets for USD CAD. Is that weekly? There's a weekly fair value gap right there. It's very likely to go to. It's very likely. Actually, never mind. I do think it's gonna go to the lower half, though. I'm not gonna lie. I think it's gonna go to the lower half, but because I can't guide you through that trade every day, because I'm not gonna look at forex during the weekdays, I'm gonna just give an easy target for you guys and just say aim for the fair value gap itself. But low key in the back of my head, I think it's going to the lower half. All right, and last but not least on forex is USD Swiss franc. Beautiful rejection of this PD array, breaking down, and yeah, I'm aiming for the lowest body right here on the monthly. So on the monthly chart, I would aim for the lowest body right there. You see the levels on the chart. You have this on recordings. You can always play it back. I like that as a target. That's my second target. That's my third target. All right, but we take it one step at a time. And where would I want to see it respect? Yeah, if we're gonna get there, it needs to respect this fair value gap. Simply put, it already tapped into it. By the way, it already tapped into it with that wick. See, but it needs to respect this to continue lower. Specifically, the 50% and below. It needs to respect 50 and below in order to see that target. And I believe it'll see it right away, low key. I think it's going to maintain this momentum right away. And of course, if we're going to break this consolidation, what do you want to break it with? Fair value gaps. You want to see a fair value gap as we break out of here. Ideally on the 4 hour. 4 hour would be lovely. Hourly is cool. 4 hours probably better for the target that we have though. But this is the hourly version of the chart. All right. So cool. That's forex for you. Let's get into crypto. What I see on crypto here. All right, man. Bitcoin is in ridiculous consolidation, and I was telling y'all that, as always, when it comes to Bitcoin / crypto, I largely base it off of, do I see more upside coming on the NASDAQ? And the NASDAQ is really in suspension, which we're about to talk about next. So give me a second on NASDAQ. But like, low-key, I'm low-key starting to lean bear. I'm gonna tell y'all why I'm leaning bearish after doing a deep dive on the charts yesterday on the NASDAQ. I'm gonna tell you that in a second, but because you know I have a bearish bias on the NAS. When it comes to the coin right here, right? I could see it turning back over. So when I had a slightly bullish bias on NASDAQ, which I'll break everything down, I was saying that crypto has a chance to make a run to the upside. But first of all, obviously it just consolidated ever since I said that. I think I said it here. Is it Saturday? Yup, exactly. I remember saying it on a Saturday. This green candle is when I was like, oh, crypto might actually run. And then it just stayed put. Nothing has happened, literally. Like literally nothing has happened since I said that. And so I don't know. After doing a deep dive, which I'm gonna explain all of that, I feel like NASDAQ is more downside. We still need confirmation for the NASDAQ. But just so you know, I would say I'm staying put on Bitcoin. If you've been following me for a while, you may remember on the day that Bitcoin ran 10% in one day, I called the rejection right there in class, live in this class. It's gonna reject this area. But I also said it's gonna consolidate. It has a chance to consolidate between this purple and this blue area. And what has happened ever since then? We have consolidated in that area. And so we need to see what Bitcoin wants to do. This blue area is a valid PD array. This purple area is a valid bullish PD array. What is going to happen next? We're in suspension. I think, my fault. Under the purple, I'm bearish. Over the blue, I'm bullish. So right now, I'm in between sentiment, but I'm telling you where I'm leaning. I'm leaning bearish at this moment. Obviously, it's at a point where it's like, I see very beautiful bull cases and bear cases, so I can't be mad at anybody's take right now. I'm not mad at anybody's take, but I personally lean bearish right now. I think it might turn over and invalidate this purple area. And if it invalidates this purple area, it looks very bad for the coin. I ain't gonna lie, very bad for the coin. And I think I've said in the past, if Bitcoin loses, I think I said if it loses like 70, then I have Bitcoin going back down, potentially into the 40s. Whether it's high 40s or not, I think it'll see below 50K if we could lose 70. So, but Bitcoin's fate is all in this weekly bullish fair value gap. It's the Bitcoin's entire fate is in this. Well, not forever, you know. I'm talking about during the bear market. So yeah. All right, that's the coin, and everything else will follow Bitcoin. Now let's get into Nas world. Okay, Nas Quan. Here we go. Nas Quisha. Let's talk about it. All right, man. So where's that, man? Oh, let me move the Zoom thing is in the way. Okay, so y'all may remember in the chat I said this is the bear case, right? So I've been talked about this. I put the screenshot out way before we got to the green area. I had two areas I was looking for rejection zone with the NASDAQ. I had the blue area, which we traded past, but I also had the green area right here. If you could zoom in, you'll see that. All right. And I looked at this to take us to brand new lows in the market. Like I was like, nah, this bear market not over. We finna reject the green and go lower. All right. Then I also at the same time, I was like, I do see the bull case because the bull case is based on something that I saw from December 31st, 2024. So on December 31st, 2024, I put out this projection. Let me zoom in a little bit. Yep, I put out that projection on the left side. Before we ever knew there would be a bear market, I said price gonna come down straight into this weekly bullish order block. So let me show you that on the screen right now. That is this blue area. And I will show you from a weekly perspective. That is this. My fault. Hold on. Be adjust supposed to be on. My bad. Be adjust. There we go. Okay, that's this. That's this picture. Be adjust is on at the bottom of my screen on TradingView. Be adjust is on. Okay, bottom right. Make sure it's highlighted blue. All right. So we have this bull case. This could send us higher, which it did. It actually caused a massive rally. You might not realize it, how many points this is, but this is not little. From 16,500 up to 19,500. That's like a 3K bounce. So this is a lot of money. Don't get me wrong. It's a fire play. But the question is this the end of the bear market? That's the real question. Like, is this actually what's going to send us to all-time highs? To me, just like I said on Bitcoin, over this green area, I'm bullish, and I think we're in a bull market again. Under this blue area, especially under these lows for real, yeah, nah, we got more downside. You feel me? Brandy said, what's B adjust? What is B? Futures contracts change every 3 months as far as the NASDAQ and the S&P goes. And so it kind of messes with the pricing on the right side. Like, you know, they gap up, quote unquote, but it's not a real gap. It's just contract differences. So basically, TradingView can adjust the contract for the price changes, because just because the price changed, I mean the candles is changing, right? So they kind of do whatever they can to adjust it to make the chart just right. So let me just show you a quick example. Right now, I want you guys to look at the order block that I drew. Let's zoom in on it. Look at this. I drew it just like this. Okay, that's order block I drew on December 31st that I said we're gonna bounce on. Cool. Now I'm gonna turn B adjust off. I'm gonna turn it off. What the heck just happened, right? You're like, yo, what happened to those two red candles? Yes, exactly. So it literally changes your chart for real. And these are the red candles now. You see the red candles are down here? So it can throw off your analysis. So you have to make a decision on which one you're going to chart on. I'm charting with B adjust on personally. That's how I seen the chart when I drew my projection in December. So I'm rocking with this chart for now. And so, yeah, we tapped into that exactly how I said we would. And we pushed. And so now we're in a battle between cases. And need I repeat myself, where does consolidation tend to happen? Between a valid bull case and bear case. That's where consolidation tends to happen. And so you can't be surprised at the chop that we've been noticing lately. This the 4 hour. You can't be surprised at the chop. Now, here's something else I said. After we tapped into this bullish fair value gap, my fault, this bullish order block, and we popped out of there with a beautiful, beautiful 4 hour bullish fair value gap, I said, I'm bullish as long as the bodies could hold the upper half of this purple area. You can see the bodies have been holding that thing. So you can see why at this time period, especially this, you can see why I was like, yo, I'm low-key leaning bullish on the NAS. Because as far as I know, let's take it a step back. Let's slow down for a second. Whenever we have a weekly POI, right? I like to see 4-hour confirmation. Remember the exercise from the beginning of class when I told you about an hourly POI? We like to see what? 5-minute confirmation. This is a weekly POI. I like to see 4-hour confirmation. So for me, when I noticed, after tapping into the area we talked about 4 months ago, what I noticed? We invalidated this bearish fair value gap. Boom, invalidation. What happened after that? Creation of a fair value gap on the time frame I need to see it on. Beautiful. Now, ideally, as I told you guys at the time, I ain't really want this purple area to get tapped into. I actually would have preferred if we kept going and didn't touch this area. But it's okay. If it does, we just need to respect the upper half. Okay. And so we obviously came into it. We obviously came into the area, and now we just need to see price respect the upper half. So why am I leaning bearish? Because you're like, yo, Rel, it's respecting the upper half. Why are you leaning bearish? The reason why I'm leaning bearish now is 2 reasons. One, we're lacking the energy out of this. For me, a lot of very bullish reversals. Like, remember, this has the potential to be the bottom of the bear market that only we called for. By the way, side note, nobody in the world called for the bear market besides us. We called the exact tick, if you're new here, the exact tick of the top. We called that 7.5 months early. So nothing shocked us. This whole drop did not shock us. We've been short since the top. We've been shorting this. Word. So then we called the bottom potentially. If this is indeed gonna be the bottom, there's supposed to be a strong reversal off of that. Typically, like they're not trying to let everybody in the upside and then move. So like for me, it's like the lack of energy on the upside is like, it's sus to me. That's what has me leaning bearish. Like, I don't know why we came back to these lows. I don't like that. The other reason that I'm starting to lean bearish is when I looked across the Mag 7, I use that as an indicator for the NASDAQ, because the Magnificent Seven, that's your Nvidias, your Apples, your Microsofts, all those major stocks, Amazons, Teslas, those, I looked across, that's my deep dive I was talking about. I lean bearish on those. Like, they're not showing me bullish signs anymore. And so I use that as an indicator for the NASDAQ. Like, to me, if they're all going to move lower, then that's what really drives the NASDAQ anyways. So if they're moving lower, it's probably going to take NASDAQ with it. That's why I lean bearish on NASDAQ now. Does it need some more confirmation? Yes, it does. We're still holding the upper half. So I got no reason to say I'm confirmed bearish. Like, I'm not confirmed. I'm just telling y'all my thoughts. I'm just telling you what I lean towards. Obviously, the whole world has been stuck in this consolidation. Everybody's speculating what's going to happen because this is a very crucial area. But I'm just letting you know, like, that's my current thoughts. The Mag 7 is making me feel we're going to drop off, and the lack of energy is making me feel we're going to drop off. Something a bullish person might look at is this. Let's talk about what a bullish person's thinking. They're going to say, yo, Rel, off of this weekly order block, we made a 4-hour bullish fair value gap. And price is holding the upper half of that bullish fair value gap with bodies. And on top of that, I know, Rel, I know you don't like the upside. I mean, my fault. I know you don't like that we came back down, but we did come back down in a staggered manner. So this could just be consolidation on top of here before a big breakout. That's what a bullish person is thinking. And I'm not mad at that take either. Like, because for me, if this was a failure swing, which means we failed to run the previous highs, a failure swing, we failed to run the previous highs, and we're actually about to move to the downside now. If it was going to be a failure swing, a lot of times it doesn't start off like this. It's not what failure swings look like a lot of the time. Failure swings usually catch people off guard. You want to see a nice failure swing? You want to see one? I got you. How about this one? Right here? Yeah, failure swings catch people off guard. So this is just the opposite example. Price failed to take the lower low, right? It failed to take the lowest low right there. So it failed that swing. It failed that swing point, and now it's pushing to the outside. That's what failure swings usually look like. It usually get the heck up out of there. You feel me? It looks nice like that. So that's a bullish failure swing. And what we're looking at now is supposed to be a bearish failure swing. We failed to take the previous highs. But why did it not rocket to the downside? Like, why did it not die? It just did this nastiness. So that's what I'm saying is like really suspect about the downside. But I told you my concerns on the bull side and the bear side just now. Okay, I'll tell y'all why I'm leaning bearish just because of Mag 7. I think that at any day it could break down. So for me, I don't like swing trades or any type of like long-term trades in this overall area. I like if we lose these lows right here with a 15-minute bearish fair value gap, if we lose the yellow line with a 15-minute bearish fair value gap, then I like potential swings to the downside. Then I think, yeah, now it's over with. Nasdaq finna make new lows. You feel me? That's what I'll be thinking at that time. But anything above it, you got to be careful. You got to be careful. And then same thing. To the upside, I would want to see price break the highs for real. If it break the highs, then I like swings to the upside as well. You know, but same thing. If it's gonna break those highs, there got to be a 15-minute bullish fair value gap for me to really believe that it's gonna make a long-term move. You know, so this in between area between these two yellow lines, this in between area is largely a no trade zone for me. Doesn't mean I'm not gonna take any day trades. I'm really like low-key talking about swing trades. Day trades, all I do in areas like these, day trades, is I'm aiming for like baby targets, you know, nothing too crazy. I might go lowest body here. I might go these highs, these just quick, easy targets, nothing too long term. And I hate that type of trading. I really do, because I'm somebody that tends to like look for bigger plays and catch bigger plays. But I'm just saying, in areas where price action looks as ugly as this does, yeah, you gotta protect capital, man. You gotta protect capital. Um, what's something else I could say here? Like, look at what I want you to notice about bad price action is PD arrays that typically should work are not working. So in context, typically this bearish for value right here, low key, we wouldn't even be back there in the first place. But if we came back there, we would have used it. Clearly, price invalidated it. So you would think, okay, if we're invalidating that, we should go and do what? Run these highs next. We should run the highs that I just circled next. What did price do? Came right back down. Yes. Why? Because this is low probability price action. There's no real direction. We're being held in a manipulated range. And so that's something I highlighted for my people that's on my live trade. When the day ended here on Wednesday, when the day ended on Wednesday, and we had this is gonna be hard to explain now, but like you gotta realize, like, what is this, a 3 o'clock candle? When I was making this analysis, this green candle wasn't green yet. You know, it was actually still red. And I was like, okay, y'all, it's very likely we're gonna have a 4-hour bearish fair value gap above us right here. Obviously, it turned green and made the fair value gap a lot smaller, because the 4-hour candle does not end until the end of the day. So if you are following what I'm saying, because it sounds confusing, I hope you're following what I'm saying. All I'm saying is that during the 3 o'clock hour, when price was down here, I was expecting a large 4-hour bearish fair value gap. But by the end of the day, we flashed up, which I also called for, by the way. At the end of the day, I called for this flash. So, but anyways, we flashed up and it turned the fair value gap this small. Look at the 4-hour fair value gap we got. Look at it. It made this baby little fair value gap by the end of the day. I'm like, all right. But what I told them is, I expect chop then, because if we're gonna make this fair value gap, price absolutely has to respect it. Absolutely. And if you watch price disrespect it, Thursday's price action will be terrible. And that's why Thursday I told my mentees as well as my premium members, I told them we're not trading on Thursday because it's gonna be bad price action. And look what happened on Thursday. Thursday is this cluster of candles. Thursday is this crap. Yeah, I'm good on that. Y'all can have that. Like, y'all can have that, bro. I'm not trading that nonsense. Y'all can have that. Like, real talk. But the reason why I knew that is based on how price would treat this green area. So watching this happen overnight, us trade past the green, I was like, yep, Thursday's gonna be dirt. I mean, I knew it, and there we go. So if fair value gaps could really help you with seeing chop ahead of time, for real. All right. Just said SMT. I'm not sure 'cause I didn't look at ES yet, but we about to go to ES right now. All right, because I kind of spent a good amount of time on NASDAQ, but I clearly had a lot to say about NASDAQ. All right, so yeah, you guys know the breakout levels and everything. Oh. Yeah, you put potential. I know what you're saying, Tiff. Put potential. You feel me? Definitely a potential to happen, and that's why I'm like really chilling in this area, and I'm largely looking at the breakouts, the breakout levels. Doesn't mean I'm cash. I'm gonna take some day trades in here for surely, but they're gonna be conservative until we break. Definitely has potential for that though. I know what you're talking about. That's a mentorship concept she's talking about in the chat, by the way, y'all. So yeah, ES is literally the same analysis. I literally have no difference of analysis here on ES. Um, yeah, there's no difference in my analysis. It's the exact same thing. I'm gonna be real. So now I'm not saying that in a bad way, Tiff. I'm just putting them on. They don't know what it is. Right. Um, Dow, the Dow. Yeah. So when it comes to the Dow Jones, same thing. Remember I told you guys this was a target. This monthly bullish fair value gap. Yep, price got there. An objective was met, right? An objective was met. Then we got a retracement. Here we're battling between a bearish case and a bullish case. So it's the same thing. Like breaks above the highs, breaks below the lows. It's really what I'm looking for. This yellow line here are the lows that I would be interested in it. It's just like NASDAQ, right? The low before the push up. Those lows are the breakout levels for Dow for me. I want to see how we treat those lows. 15-minute bearish fair value gaps would allow me to take it to these double bottoms right here. Okay, so I like that, and then of course we could push higher as well. So the Dow, the Russell, man, the Russell, I believe B adjust should be off. B adjust is off when I'm on the Russell. All right, the Russell looks noisy, but I'm gonna break it down. I don't like noisy charts. I'm gonna break it down real quick. All right, why do I have a blue one though? Oh, I remember. I was talking to somebody about this. All right, first and foremost, notice that on the monthly chart, the Russell for the longest was holding this bullish fair value gap. If you need any proof on fair value gaps, yeah, price definitely referenced this thing. So yeah, it was holding this area for months, like months and months and months. And then we finally ran higher, and we ran so high that we swept the previous high. Now we coming back down pretty aggressively right here. All right, and now I'm looking at these lows as a target. So I know the monthly candle is not finished being created. There's still 9 days left on it. I'm looking at these lows as a target. You can see to take us to those lows, I will want to see price respect both this weekly SIBI or slash and this daily SIBI. Either one is valid to me. Okay, that's why I highlighted both. It already rejected this weekly SIBI. Let me show you from a weekly perspective. It already rejected this weekly one and came down. I actually deleted it. I'll just delete it just cause. All right, that's gone now. That's something we also called for. And now we're watching to see if price can reject this. It obviously touched it and rejected initially, just like the whole market. They all came up, NASDAQ, ES, everybody came up to their premium inefficiencies and then made a reaction. And since the reaction has been consolidating. So yes, we're consolidating across everything right now. So it's very tricky to say where price will go. I'm trusting a higher time frame. To me, the monthly already snitched. To me, the monthly wants to come here. And so because the monthly ratted, I'm very interested in either of these inefficiencies, the daily bearish fair value gap or the weekly one. And I'll take the Russell into 1,640. Michael says, market potential to sweep highs and stop out sellers because it's still respecting bullish fair value gap. All this to generate liquidity to go lower monthly SIBI. So if I'm understanding you correctly, you're speaking to a potential like AMD could happen as well. Like they could like sweep highs and come down on all these tickets. I'm sure you're not just talking about the Russell, you're probably talking about NAS, all that. Yep, all that is possible. While it respects the inefficiencies, very possible. I'm watching for that as well. Hence why I was saying like if we break those levels, that's why I told you guys about the 15. Let me tell you guys real quick why I said the 15-minute. This is why I said the 15-minute. I want to see fair value gaps on because on the NASDAQ, this purple area is a 4-hour bullish fair value gap, right? So we made a low on the 4-hour bullish fair value gap. And so if I'm gonna believe in the break to the downside, I'm going to be looking at the 15-minute inefficiencies for confirmation, because when I have a 4-hour point of interest, I use the 15-minute for confirmation. When I have a 4-hour point of interest, purple area, I use the 15-minute for confirmation. So if the 4-hour is truly going to fail, I would expect to see 15-minute fair value gaps under this yellow line. So if I can get a 15-minute bearish fair value gap under this yellow line and it's respected, yeah, I believe we're going to make new lows. All right, I believe we'll see new 4-hour lows. All right, because I correlate the 4-hour and the 15 together. That's why I chose that when I gave you guys the statement that if we lose these lows, we need to lose it with 15-minute bearish fair value gaps. Can you trade before that? Yes, I'm just letting you know, especially for swing trades, it's a good sign to see a 15-minute bearish one under the yellow. Okay, especially for swings. All right, so we talk about that CL. Yeah, no problem, Yuli. My apologies for not explaining it initially. But that's why I like questions or comments in the chat. Y'all help me, like, pick up on points that I missed. All right, so CL. What was I saying here? CL came into this area. We had targeted the monthly BISI. I kind of forgot what I was thinking about CL. I mean, I couldn't clearly see I have some bearish inefficiencies listed. I think I'm watching these inefficiencies to see what price want to do. I can see there's a daily SIBI here that we rejected. There's also a 4-hour SIBI that's overlapping it. And I would say this is a bad sign for bullish people, is how deeply into this bullish fair value gap we just traded. See this? That's a bad sign, because on this breakout, we want to see price respect the upper half of that. So that's a bad sign. So there's definitely a chance that CL, which is oil, could reject this right now and come in and take out this whole area. Very, very strong potential. If it's going to do that, if it's going to indeed make that move, I wouldn't want to see price invalidate the lower half of this 15-minute bearish fair value gap. Now, there is a chance we can come to the upper half and still reject it, but I'm just saying, for the most energetic move, we want to reject the lower half and continue lower. But nonetheless, if you just want to watch this area altogether, for me, put it like this: on this ticker, I am bearish if we can respect this 15-minute bearish fair value gap altogether. I am bearish. As long as you respect this, I'm bearish and expecting price to run out this section on CL. All right, so that's what I'll be looking at there. And I mean, I can also say in the same breath, above this area, I think CL will run these highs. So above this blue area, I think CL runs those highs. All right. So, but I think it's good. I think it's gonna drop though. I think I'm bearish on it. Gold. Okay, I gave you guys 2 targets on gold last week. Let's see how last week went. So last week on gold, mind you, we are at all-time highs. Price has never been here in the history of life. Okay, history of life. Last week in class, we started class, what is it, Sunday? So we started class in this area. And I said to you guys in class, I'm bullish on gold as long as it stays anywhere above this fair value gap. I said anywhere above this hourly fair value gap. I actually drew it wrong, which is funny. I meant to say that. Okay, anywhere above this hourly fair value gap, I'm bullish on gold. And we watched gold go on a crazy run last week, straight to the first target. But I gave you guys 2 targets that week. I said this is the real target for gold here, 3432.8. And guess what? Yes, I'm still looking for that target. So I think price will run straight there. Especially, it looks like we're not going to even revisit this daily one that we just made. Yeah. I don't like saying things definitively like gold is going there. Like, I don't like making claims like those because I have a responsibility. We trade probabilities, but I'll say there's a high probability of gold hitting 3432.8. So I would trust bullish PD arrays into that area. Personally, I would trust them. Okay. Definitely would want to see gold respect this area right here that I just highlighted. Definitely want to see gold respect that. Ideally, the upper half of it, ideally. But yeah. And then we could take it up into that yellow area. All right. So we almost done though. We almost done, y'all. Last year in August, I told you guys I'm looking for the Nikkei to respect this blue area and run to the yellow line. So this is actually confluence for NASDAQ. I'm glad this came up. Look. All right. So if you've been following me for a minute, yo, shout out to the day oneers. You may remember when price on August 5th, I think it was, NASDAQ had a crazy drop. Everybody had a crazy drop and it made headline news. Like, yo, what happened to the market? Crazy drop. The Nikkei, there was something about the carry traders, something Nikkei dropped, NASDAQ dropped, everybody dropped. The recession scares was in the air. And I was like, yo, we ran straight to our target on a lot of tickers, and then price started pulling up. And I was like, yo, we about to be bullish. While the whole world was bearish, we about to be bullish. Why? Because as I teach you guys, once it makes headlines, it's time to look the other way. Just like, real quick. I don't know if y'all peeped this. I don't know if y'all peeped this, but like, remember, we in this community been bearish since the tippy top. Like, we've been bearish. And everybody was trying to buy the dip. They were 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 trying to buy. By the time we came down here, everybody's like, yo, we're bearish. Oh, I'm looking for lower prices. Bear market, bear market. Headlines, bear market. My mom's just calling me about the bear market. Everybody's talking. Right when we got to what? The order block that I told you we're going to bounce on. And as soon as we got to the order block, what do you notice happened in the market? We rallied and stopped out so many people that was in bearish positions. Major rally. Okay, why did that happen? Because right here, mind you, I want to be very clear about something. Like, we had this massive drop on Friday. Let me point to it. Massive drop on Friday. And then what did the market do? It gapped down. Please remember where candles open up. This green candle opened up at the bottom of the rectangle. So we gapped down on Sunday night for futures. What do you think everybody's thinking? Oh, shoot. It really is a crazy bear market. I heard about it this whole weekend, and we just gapped down on futures. Man, this bear market is crazy. It's about to go nuts. We drop a little bit lower, and then we had a massive rally ever since. I just told you, this is 3,000 points. Don't ever get it twisted. This is 3,000 points on the NASDAQ. That's not a little bit at all. It's not a little bit of points. All right, so we had a 3,000 point rally out of this area. Why? Because it just made headlines. Every time everybody's on one side, it's time to start entertaining the other side. Okay, so what happened after we came into this area, after Trump's pause, quote unquote, whatever they use to sell the technicals, because technicals seen it first. The news surrounds around that. But anyways, they use Trump's pause for that, right? Okay, so now people are low-key bullish a little bit. I've been seeing a little bit of bullish sentiment out there based on Trump pausing tariffs. So it might be time to go back to new lows again. That's low-key a little bit confluence for me because I'm like, okay, they convinced people we're bullish now after that Trump rally. They probably convinced me we're bullish. But anyways, my point, let's go back to the Nikkei real quick. When price came down here on August 5th, and then we started to pull back up, which we were bullish on, I said, I believe price is going to use this SIBI to come right back to run these lows, which is the red wick for real, but it's right next to these lows, so I feel like it's going to run all of that. But I said it's going to use this area to do it, and would you believe, people, how disgusting this consolidation was literally since August? We've been consolidating here since August, and we finally breaking down. And why is this relevant? Because this has been moving with the NASDAQ. I don't think y'all realize that. This ticker moves with the NASDAQ for real. They've been doing the exact same thing. And so it ended up using this area finally to break us down. And then we came and we swept these lows. So yeah, target hit, but I don't think it's done. Like, I would be very surprised to see them make, what is this, a quote unquote triple bottom here, quadruple at this point. Yeah, I don't think that's it. I can see us. We just did the same retracement NASDAQ did. I think it's gonna come right back down and break the whole area. You feel what I'm saying? So what is the PD rate they're using? They're actually using the same PD rate NASDAQ is. This VI. That's what they're using. Look how we used it. Tell me this don't look exactly like NASDAQ. People, this is exactly what NASDAQ is doing right now. Same exact thing. And so because I don't feel like they're done with their drop, like I don't feel like their objective is really met. That's some confluence for me on NASDAQ. So notice I'm using different tickets to bring me NASDAQ confluence. That's my long-winded way of saying like I think this is going lower. And so I think NASDAQ also will go lower. I don't think they're gonna move opposite all of a sudden. They've been moving the same way since last August. Michael said, people don't realize the market hit all-time high on all time frames and started to stress at the area, and critical thinking when market is like that is to find big stop loss areas for traders of all kinds, initiating a big drop, which it really is. Price is trying to find liquidity areas to sweep to initiate higher. Indubitably, and for me, it's not even what you're saying is true. It's also like they engineer liquidity on the way up. This higher low is engineering liquidity. All these lows is engineering liquidity. Okay. They engineer liquidity with these highs. Let me show y'all real quick. Okay, they engineer liquidity with all these highs, and then what do? They swept those highs. Boom. See that green candle? That's the sweep. Making people think you're bullish, right? So that's a breakout candle. Everybody gets in calls. Everybody gets in buys. What happened after that breakout? Boom, death. Buy. Taking back all these stop losses they generated right here, as well as right there. And of course at the swing low, which was my official target right there. But with these lows, right? I told y'all about these lows earlier today. I think we're gonna run this yellow line as well. So I think there's more downside on this trade. Okay. And only thing I could say is if you've been following me for a while, all I can say is before that engineering even happened, back when it was July 7th, 2024, I did call the top tick just to add some confluence on price being predetermined, because I had some pushback when I wrote that on Threads this past weekend. I love the pushback. It's always funny to me because I'm like, you just don't know. But like for anyone that ever argues if price is predetermined, if price is not predetermined, how could I 7 months early tell you the top tick of a bull market when we're trading at all-time highs already? We're already trading at all-time highs. And 7 months early, I told you price is going to top out at 611.85 and start a bear market. I didn't even say it's going to reject. I said it's going to start a bear market verbatim. And then what happened after we hit that? A bear market officially. So if you ever doubted that price is predetermined, I don't even know how a person could doubt that after something like that. But anyways, when it comes to SPY, they doing the same rejection that everybody else. So same analysis as SPY and QQQ that I've given on NASDAQ and ES, same analysis. All right. Juliet says, that's why I like the concept of buying high shares for 0.30 cent moves during these times. Interesting. There you go. But yeah, I could go through Mag 7 tickers, but based on time, I'm going to skip those. If y'all want me to go through it after the recording, I'll do that though. But just know I looked across the Mag 7 tickers, and I do have various sentiment across those tickers. Okay, so y'all heard my whole analysis on the market just now. Y'all know the bull cases and the bear cases. I'm telling you, I'm leaning bearish, but I told you how that could flip at any second because we are in a very crucial area. So just keep that in mind, everybody. We're in a very crucial area between two extremely valid PD rates. We call for this bounce, but we also call for this rejection. We call for both of them. And so now we watching price consolidate in between. Is my December self-correct or is my 2 week ago self-correct? I don't know who's gonna be right at this point. But we're gonna make money either way. It's just gonna take a little bit of patience. And so if you like what you heard here, definitely subscribe to the channel, like this video, and join the free community. The link is in the description. The mentorship starts tomorrow, so if you really want in, you're gonna have to DM me. My Instagram is in the description as well. And we're recording this on Easter. Happy Easter. Remember the meaning of the holiday, and keep God first in your life. It's the most important thing that I ever said all night. And with that being said, that is all she wrote.